Picture this. A modest 5-story building in the Cayman Islands houses 20,000 companies. Warren Buffett pays less tax than his secretary. Apple avoided $44 billion in taxes in just 3 years. While you're struggling with your tax bill, billionaires are living off loans and never selling a single stock. Today, we're pulling back the curtain on the $10 trillion shadow economy that the ultra-wealthy don't want you to understand. This is how the rich hide their money, and how you can also do the same. The two worlds of tax strategy. There are two completely different games being played when it comes to taxes, and chances are you're only aware of one of them. The first game is tax evasion, the illegal stuff that lands people in prison. This is where criminals underreport their income, hide assets in secret Swiss accounts, or inflate fake business expenses. It's straightforward fraud, and it's exactly what you think it is. But then there's the second game, tax avoidance. This is where billionaires play in broad daylight, completely legally, while paying almost nothing to the government. They're not breaking any laws, they're just playing by a completely different set of rules. Here's the fundamental difference. When you get your paycheck, taxes are automatically withheld. Every dollar is tracked, every bonus is reported, every bank transfer over $10,000 is flagged. Your financial life is an open book to the government. But the ultra-wealthy, they don't own anything. Their companies do. This single distinction changes everything. While you're trapped in a system designed for salary earners, they've constructed an elaborate network of entities, trusts, and offshore structures that operate in the shadows of international law. The Apple revelation. Let me show you how this works with the most audacious tax avoidance scheme in modern history. From 2003 to 2013, Apple funneled over $120 billion through Ireland, paying just 0.005% in taxes. That's $50 in tax for every $1 million in profit. Instead of the $40 billion they should have paid under US law, Apple paid just $600 million. Here's how they pulled it off. Apple created 2 shell companies in Ireland. Not real businesses with offices and employees, just legal paper entities designed to collect profits. These companies owned the rights to sell Apple products everywhere except the United States. But here's the genius part. Apple found a gap between 2 different tax systems. Irish law says you pay taxes based on where your company is managed. US law says you pay taxes based on where your company is incorporated. So Apple incorporated in Ireland, making the US say, "Not our problem." But they managed the companies from the US, making Ireland say, "Not our problem either." These subsidiaries became stateless entities. They legally existed, but no country could tax them. When you bought an iPhone in Paris or Tokyo, the profits didn't go to Apple USA. They went to Apple Ireland, sitting untaxed in a financial no man's land. The European Union eventually caught on and forced Apple to pay $14 billion in back taxes in 2024. But for a decade, this structure saved them tens of billions of dollars. The offshore machine. Apple wasn't unique. This is just how the game is played at the top. Welcome to the offshore banking system, a parallel financial universe where over $10 trillion sits quietly in jurisdictions most people couldn't find on a map. That's more money than Japan's entire economy, hidden in places like the Cayman Islands, British Virgin Islands, and Switzerland. These aren't just tropical tax havens. They're sophisticated financial centers that have turned banking secrecy into an entire industry. They compete aggressively for wealthy clients by offering 3 irresistible things: zero or minimal taxes, ironclad privacy laws, and loose reporting requirements. The Oogland House in the Cayman Islands perfectly illustrates this system. This modest building houses 20,000 companies. Barack Obama called it the biggest tax scam in the world, but it's completely legal. Here's how the wealthy use it. They don't just open a bank account overseas, they construct elaborate ownership structures that make them invisible. Step 1. Create a shell company in a tax haven. This company exists only on paper. No employees, no office, just a filing cabinet at a law firm. Step 2. Transfer all your wealth to this company. Your mansion, your yacht, your investment portfolio. None of it is in your name anymore. The company owns everything. Step 3. Add a trust in a different country to own the company. Now you're not even the owner, you're just a beneficiary who gets to use everything but legally owns nothing. The result? A $150 million super yacht owned by a company in the British Virgin Islands, held by a trust in Jersey, managed by a nominee director in Panama. Your name appears nowhere. The buy, borrow, die strategy. But here's the question that breaks most people's brains. If your name isn't on your money, how do you actually spend it? The answer reveals the most sophisticated part of this system. You never sell anything, you borrow against it. When billionaires like Elon Musk need cash, they don't sell their stock and pay capital gains taxes. They use their stock as collateral for ultra-low interest loans. No sale, no taxes. This is called buy, borrow, die, and it's exactly what it sounds like. Buy assets, borrow against them, and die before you ever have to pay taxes on the gains. When you die, your heirs inherit the assets at their current market value, not what you originally paid. All those decades of untaxed gains, they disappear forever thanks to something called the stepped-up basis loophole. Jeff Bezos, despite being worth over $100 billion, has paid almost nothing in federal income taxes using this exact strategy. His wealth exists on paper, but he lives off borrowed money secured by that paper wealth. The transfer pricing game. But offshore banking isn't just about hiding money. It's about moving profits to where they won't be taxed. Enter transfer pricing, the art of making profits appear in low-tax countries through internal company transactions. Imagine you own a shoe company in the US, making $1 million in profit. Normally, you'd pay 35% in corporate taxes, $350,000, but instead, you set up a subsidiary in the Cayman Islands with 0% corporate tax and transfer all your patents and trademarks to this offshore entity. Now, when your US company sells shoes, it has to pay licensing fees to use those patents. You charge yourself $800,000 to use your own intellectual property, leaving only $200,000 taxable in the US. You pay $70,000 in US taxes instead of $350,000, saving $280,000. The $800,000 sits offshore, completely untaxed, until you decide to bring it back, preferably during a tax holiday when rates are reduced. The Panama Papers. Revelation. In 2016, the world got a rare glimpse behind this curtain when 11.5 million files leaked from Mossack Fonseca, a Panamanian law firm specializing in offshore structures. The Panama Papers revealed that hundreds of world leaders, politicians, and billionaires were using these exact strategies. Over 214,000 offshore entities were exposed, with half of them located in the British Virgin Islands alone. Mossack Fonseca had built what they called the McDonald's of the offshore system: high volume, low cost, pumping out anonymous shell companies for anyone with enough money to afford them. The leak led to worldwide investigations, government resignations, and over $500 million in recovered taxes, but it only scratched the surface of a system that processes trillions of dollars annually. The cost to society. While the wealthy play this sophisticated game, everyone else pays the price. Every year, approximately $70 billion that could fund US infrastructure, healthcare, education, and law enforcement simply vanishes into offshore structures. Globally, tax authorities estimate that 40% of multinational corporate profits are shifted to tax havens. The result is a two-tier system where ordinary workers pay their full share, while the ultra-wealthy contribute almost nothing to the societies that enabled their success. Warren Buffett himself admits the absurdity. I pay less in taxes than people who work for a living and make as much money as I do. But here's what's truly infuriating. Congress has deliberately weakened the IRS's ability to investigate these schemes. Budget cuts and staff reductions have made it nearly impossible to audit complex offshore structures. The only reason we know about these systems is through leaks like the Panama Papers. Can ordinary people access this world? You might wonder, can regular people use offshore banking too? The answer is yes, but not for the reasons you think. Offshore banking for ordinary citizens isn't about tax avoidance. If you're a US citizen, you still pay US taxes on worldwide income, regardless of where your money sits. Bank secrecy is essentially dead, thanks to international information sharing agreements. But offshore banking can offer higher interest rates, access to foreign investments, currency diversification, and potentially safer institutions. Singapore's top banks consistently rank among the world's safest, while US banks have historically had more failures. However, the sophisticated tax structures we've discussed require millions of dollars and teams of lawyers to implement. They're simply not accessible to average investors. The offshore banking system isn't going anywhere. It's too profitable for the jurisdictions that host it, and too valuable for the wealthy who use it. While governments promise reform and investigators expose scandals, trillions of dollars continue flowing through this shadow financial system. The rich don't just get richer, they get richer while paying almost nothing back to the societies that made their wealth possible. We all knew the game is rigged, but now you understand exactly how.